Bitcoin does not move because of opinions or hype. Bitcoin moves because of numbers, and the most important numbers come from inflation. The Federal Reserve, the central bank of the United States, does not use CPI as its main inflation gauge. It uses PCE, personal consumption expenditures. Even more important is Core PCE, which excludes food and energy and shows long-term inflation trends. The Federal Reserve's official inflation target is exactly 2.0% per year. Every major interest rate decision is built around how far inflation is from that 2% level. When inflation is low, money is cheap. When inflation is high, money becomes expensive, and crypto reacts directly to that change. Let's look at real historical numbers. In 2020, Core PCE averaged around 1.4%. Because inflation was far below the 2% target, the federal funds rate was set between 0.00 and 0.25%. Liquidity expanded aggressively. At that time, Bitcoin traded near $5,000. As liquidity flooded the system, Bitcoin entered a historic bull cycle and reached approximately $69,000 in November of 2021. Then, inflation exploded. In March of 2022, Core PCE peaked near 5.2%. That was more than double the Federal Reserve's target. In response, the Fed launched the most aggressive tightening cycle in decades, raising the federal funds rate from 0.25% to 4.50% by the end of the year. Liquidity dried up. Bitcoin collapsed from $69,000 to roughly $15,500. This was not a coincidence. It was inflation-driven tightening. As inflation began to slow, the pressure eased. By late 2023, Core PCE fell to around 3.5%. Rate hikes paused. Liquidity conditions stabilized. Bitcoin recovered from approximately $16,000 to around $44,000 by year-end. In 2025, Core PCE fluctuated between 2.6 and 2.9%. The Federal Reserve delivered its first rate cuts. However, crypto reactions became more selective because those cuts were already expected and priced in. This reveals the most important rule. Crypto does not trade inflation levels alone. Crypto trades the difference between expected inflation and actual inflation. If Core PCE is expected at 2.7% and prints at 2.5%, that is a bullish surprise. If it prints at 2.9%, that is bearish. The chain is always the same. Inflation numbers determine interest rates. Interest rates determine liquidity. Liquidity determines crypto market direction. That is why every serious trader and investor watches Core PCE before watching price charts. Because in crypto, liquidity comes first and price follows.